Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching, and investors are anticipating an end to the blackout period for data, with prediction that markets will see an end to the government shutdown, the US government shutdown on Friday. Now, if that eventuates, September's employment report is expected to be released at the beginning of next week, but other data releases could be delayed. Meanwhile, Goldman Sachs has revised up its third quarter US GDP estimate to 3.7% and its fourth quarter forecast to 1.3%. Now, it cited slightly stronger consumer spending, capex and exports growth than previously assumed. The brokerage's quarter-on-quarter GDP growth forecast for 2025 now standing at 2%. And the latest US data showing ADP weekly private payrolls fell to an average of 11,250 jobs per week in the 4-week period ending the 25th of October. Small business optimism fell further into negative territory. The US Treasury physical market closed, but futures trading implied the 10-year falling around 5 basis points to 4.07%. And the US dollar was down on the day, while the Aussie dollar is holding around 65.3 US cents. Well, to get across the charts and what traders are watching, Violeta Todorova joined me earlier from Leverage Shares. We started by talking about the potential end to the US government shutdown and what we're seeing in global markets.
Yes, that's a very good point. We've seen a little bit of weakness in the S&P 500 last week. However, with talks about potential reopening of the US government this week, the market started the week on a solid foot again. And given that we've witnessed a very strong Q3 reporting season in the US, it looks like the markets will gather pace and try to trade higher. So looking at the charts, the relative strength index shows quite good momentum. So I believe we can see the S&P 500 trading at around 7,000 points by the end of the year. And the outlook for next year remains also cautiously positive.
What about when it comes to our market, Violeta? A lot of bullish calls out there. What are you seeing?
I'm very comfortable with our local market. So basically, we've seen a bit of consolidation throughout October, with the index trading in a narrow consolidation, and the performance have been pretty flat throughout October. However, I believe key support is going to hold, and eventually the XJO is going to gather momentum. And I believe we are going to see a Christmas rally this year. So I believe we can see the XJO trading at around 9,000 points potentially by the end of the year. And if momentum holds, we can overshoot to around 9,200 points.
Wow. When it comes to the small players, Violeta, I mean, the Small Ord's up something 20% year to date. More upside here, perhaps?
Absolutely. Actually, what we are seeing on the charts is that the Small Ordinary Index is finally catching up with the XJO after a couple of years of underperformance. So since July, we've seen the Small Ordinary Index outperforming. And although the RBA is most probably going to stay on hold for the next few months, the long-term trajectories for interest rates to go down. So I think this outperformance is going to continue. I'm getting very bullish on the Small Ordinary Index. We are currently 10% outperforming the XJO, and I think this will continue for the rest of the year. And 2026 is going to be the year for small caps. So I am suggesting trimming a little bit of the good performing large caps and rotating money to the smaller end of town.
All right, well, let's have a look at some of the stocks then that you are seeing on your radar. So Baby Bunting, one of these perhaps.
Yes, Baby Bunting. I think the time for Baby Bunting to shine after long years of underperformance has arrived. If we look at the long-term chart, we see that finally baby bunting managed to break above resistance of $2.43, which confirms a large bottom formation. I'm very bullish on the stock for the next 6 to 12 months, and I think my first target of $4 would be easily achieved, and of course $4.90 for 2026. So current prices are very, very attractive to acquire the stock.
And Eagers Automotive, another one on your radar, Violeta.
Yes, here it's a great stock. Eagers is amazing, but the stock is more than 200% in 12 months. So we are starting to see some signs of top formation. While the stock is not a sell, definitely not a sell, I think it will take a breather. And the price is currently trading between $30 and $35. So I think we will struggle to see higher prices from here. So I'm having a switch recommendation here, trimming AP Eager and buying motorcycle holdings, which is forming a very similar chart pattern to baby bunting, just broken above resistance of 344 and giving us a longer term price target of 520. So I'm very comfortably positioning with small caps right now.
And finally, Violeta, let's have a look for the outlook for gold, because it has come back, I think, something like a 2-week high.
Yes, I'm still very comfortable with gold. There is a lot of chatter out there that gold has marked its ultimate peak. However, if we look at the RSI, we are seeing that internal momentum still remains strong. And I think we can see gold taking a breather in the next couple of months, but the long-term bullish structure is still not over. And why it matters, because even if we see gold trading sideways around current price levels, this is amazing for our small local gold producers. So it is not time to sell our gold mining stocks exposure. Still very keen on Northern Star and Perseus, which are performing very, very well.
And that does it for this edition of The Trade. Be sure to join us next time.